Hello traders and welcome to another video review. Today is Tuesday, January 25th, 2022. Let's start with the Forex calendar. Consumer price index data from Australia had surprised the market participants. The recent reading was 1.3% quarter to quarter, which was better than the forecast of 1% and the previous reading of 0.8%. Together, trimmed mean CPI and weighted median CPI were as well better than expected in the Australia. During the London session, we got the public sector net borrowing data from the UK. As you can see, the public sector net borrowing is shrinking to 16.1 billion. We are still waiting for the IFO data. Business climate, current assessment and expectations are scheduled for release at 10 a.m. Later on, during the New York session, we got the consumer confidence data. This is the key data for today from the US, 4 o'clock p.m. sharp. The market participants expect a decline from 115.8 to 111.4, so any number beating the expectations will support the US dollar and the US stocks as well. The market is, as you can see right now, kind of quiet because just tomorrow in Wednesday we got the FOMC interest rate decision and the press conference, so today's price action might not be that much involving. Nevertheless, let's take a look at the euro to the British pound first. Euro to the British pound at the daily time frame chart is still running between the channel lines, upper line and the lower line. Just recently we bounced from the lower line after a fake breakout towards the level of 8,305 pips. Then we got very nice bullish engulfing pattern. Let me just zoom in here. Bullish engulfing pattern, and yesterday we've been moving higher as well. We broke above the technical resistance at 8,380, and now the market participants are heading towards 8,448. This is the next target for bulls. The key, of course, technical resistance is 8,594, which is very close to the upper channel line. Nevertheless, despite the fact that this market is trending inside of the channel, the outlook is still bearish because, as you can see, this is a descending channel. It's sloping to the downside. We have a series of the lower highs, we have the series of the lower lows, so we're definitely going lower. We are going lower towards the level of 8,277. So this is the level of a technical support from 2019. So if we hit this level, the euro to the British pound will be cheapest in 3 years. As you can see from that level, there used to be in 2020 very strong rebound. So maybe that's the grand plan of the bears to put the market lower and lower, and then of course rise it up. But we will see how the market will react when we get to this level. Those levels are no longer necessary for us. This one is not used as well, so we are waiting for a reversal and a test of 8,277 on the euro to the British pound. Let's take a look at US stocks. S&P 500 index has been moving down yesterday, as you can see here. Let me just zoom in. As you can see here, we have a very big sell-off. The sell-off was 12%, which is the biggest sell-off during the recent uptrend. So this is the sell-off that separates the market that is moving up from the market that is about to change its direction. Recently we made a low at the level of 4,221, and that exactly means that we are, as you can see, we were trading out of the channel for a while. Of course, let me just move this channel a little bit higher. There you go. This is how it looks like right now. What is interesting on this chart is that we've bounced very strongly. Please take a look at this situation here. The technical support at the level of 4,239, 4,267 was made perfectly. There you go. This is the lowest. Yeah, this is the low. Was made perfectly in line with the current bounce of the SP500. We broke above this level, leaving a very interesting level behind, because we left kind of a hammer market into extremely oversold market conditions on a daily time frame chart. So after that correction, which is pretty much somewhere inside of this channel, still inside of this channel, despite the fact that we've been trading as low as 4,221, which is a little bit lower than the technical support from the 2021, from the July 2021. Nevertheless, what's important is the close, and the close was very high. Almost all of this movement has been retraced, and this is a show of strength of this trend, because it shows us that the bulls are still active on this market. So right now 4,488 will be technical resistance, 4,555 will be technical resistance, 4,717 will be technical resistance, and the recent high made at 4,817 will be technical resistance, and we will make it a little bit bigger, thicker, for everyone to see. There are two more levels here, very close to the recent high, and both of them will be technical resistance as well. Those levels are 4,743, 4,751, those two targets here. Of course, the key immediate technical resistance is 4,488, and then of course those two levels above it. As long as this level here, 4,234, 4,276, 4,300 is not clearly violated, this is not violation, this is just a test which is successful for bulls. As long as this one is not violated, we are still in the uptrend. However, the 12% of the correction is telling us something is about to start, something is about to change, something is about to be different than it is right now. Maybe we will start a period of the consolidation, maybe some sort of the top making process, something like this will happen. However, so far we are still in the uptrend. Please keep an eye on today's candle, which might be not that violent as yesterday's, and of course tomorrow's candle, because of the FOMC interest rate decision. The same situation I think might be seen in gold, as far as I'm concerned. No, nothing much has happened in gold. That's very interesting, because this is clearly corrective price action on gold. Clearly corrective price action. We are still making wave B and waiting for the wave C to the downside. The level of 1,823 is right now the technical support. The same situation is with 1,835. This is the technical support. 1,848 is technical resistance, and we are waiting for the top for the wave B. We got some pin bar here, which might act as a temporary top for the market. So as you can see here, so right now I will put my wave B top here after this pin bar high, but we need a confirmation. We need a big decline in the gold to confirm this top, and we need this decline below the below this golden trend line, and then below this blue trend line. So far outlook is slightly bullish because of the wave B in making. However, for 1848 might be the top for the wave B. We got clearly A, B, C to the upside, 1, 2, 3, 4, 5 waves to the upside in the wave, in the last subwave C of the wave B. So that might be it. What else should we take a look on? Of course, Bitcoin. And what is Bitcoin doing? Finally, we got some nice price action on a Bitcoin. We recently, let me just zoom in. We recently made a very interesting candle. This is the candle that is telling us that the low at 32,839 has been made on the extremely oversold market conditions. The key demand zone 28,964 to 30,196 has not been tested, so the local low was made around this level. Let me just move this old resistance here. We don't need that much of it anymore. So this is the nearest technical support swing low of this recent candle, yesterday candle. So right now it looks like again we are moving inside of the channel. This is descending channel, so as long as we move inside of this channel, this scenario is still valid. This scenario is showing us that we should go a little bit lower towards this zone and then bounce back up higher. The key technical resistance is the level of 39,540 and then 41,188, where the blue arrow is. When this level is violated, then we should expect, let me just put this channel a little bit like that and this little bit lower like this. Yeah, when we break out of this channel, we automatically break out of the break above the supply zone located at as I said 41,188, and the market is ready to test the 45,000 region and then 53,000. But if first we break down way below 28,964, the market of Bitcoin is in a multi-year downtrend. Nevertheless, conditions extremely overbought. We are trying to bounce on these conditions, so the Bitcoin is being perceived as a very cheap, and the market participants, as you can see, are ready to buy the Bitcoin for the actual price, and right now we are bouncing higher, a little bit higher. However, this much we are pretty nice beginning for the Bitcoin rebound out of the channel and above the technical resistance. So this is the current situation on the Bitcoin right now. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.